governor of the Central Bank of Kenya, Dr. Patrick Njoroge, has said there is sufficient foreign currency to meet demand, brushing off manufacturers who warned a shortage of dollars is affecting their ability to do business. Last week, the Kenya Association of Manufacturers and Industry Lobby Group said importers are struggling to import raw materials because they can't access dollars at the official rate of about 116 shillings per dollar, forcing them to buy at a rate of 120 on the parallel market. Here's a quote from the Central Bank Governor of Kenya. Here's what he said. He said, if you have a sector that's importing 90 million or 100 million, that's nowhere near the 2 billion that we pump out in FX sales to the market. The Manufacturers Association should understand that they're small and they should, well, they should go to the market like everybody else. That's what the governor is saying. Let's bring in Kalya Kiptiony, who's an investment analyst. He's live in Nairobi. Kalya, good afternoon to you. Thank you so much for joining us. Let's start with the foreign exchange situation in Kenya. Who do we believe? Do we believe the Kenya Association of Manufacturers or the governor of the central bank? You're on ground. Can you get dollars? How are things working out?
Hi, Rotas. Thanks for having me. On the ground, I think there's definitely, if the central bank governor is saying that there is no shortage, there's definitely some form of rationing that is going on in the market. Right now, if you want to access dollars, especially for import and large sums of dollars, then there's quite a bit of process that you need to go through with your bank for the central bank to kind of approve that transaction. And that being said, just today in the morning, there's a press release by one of the oil manufacturing companies or cooking oil manufacturing companies, Pwani Oil, which says it has to temporarily shut down its operations because it cannot access the dollars for them to import raw material. So in as much as the Central Bank of Kenya is saying that there is no shortage, there is quite, people are facing challenges to get the shortage. And as you mentioned, the actual price quote being given by the bank, if you're to buy dollars, it's actually ranging from around 120 shillings to the dollar right now, between 118 to 120, which is higher than the 116 that is quoted.
Well, right. So that's breaking news right there, that the oil sector is coming in and saying they're also facing a shortage in addition to the manufacturing players. So is there any other way to boost supply of dollars beyond increasing exports, excuse me, or does the central bank ramp up its $2 billion sales to the market to, I don't know, 2.5 or 3? How do we get more dollars in there?
Well, I think the central bank, the challenge facing the central bank, or rather facing the treasury using the central bank as an agency, is that we do have quite a bit of public or dollar-denominated public debt that the country has to take care of. So every time the shilling continues to lose value, our debt profile becomes more expensive. And as a result, it seems that the Central Bank of Kenya is trying to artificially maintain the price of the shilling or to stop it from depreciating further. I think if they were to let it be open to market prices, market supply and demand prices, people would be able to access the dollars that they want, but it would definitely be more expensive. The shilling will definitely slide beyond the 120 shilling mark.
Similar story here, Kalya. Similar story here in Nigeria and elsewhere. Let's move to the loan. The $170 million loan that Kenya is set to receive from the African Development Bank. Will it make any impact in terms of budget support and assisting the agricultural sector?
I don't know whether it will make any impact. This being an election year, public use of funds tends to be a little bit more misused, or it's harder to account for it. And we are not sure whether it will go towards helping the agricultural support. We'll see whether there will be any subsidies given to farmers on fertilizers as a result of the loan. But for now, I'm a little bit skeptical. Just it being an election year, it could go towards someone's campaigns.
Hey, it's a similar situation. Are you worried about Kenya's debt profile?
Yeah, I think we all are. It's been very, very tight the past couple of years, and people have been taking note of that. And especially the foreign debt is a concern with how the shilling is performing, and the general status of the economy in the country. It's a cause for worry, and it's becoming more and more expensive to repay our debt as the more the shilling continues to depreciate. And yet we are still in the market for another Eurobond. I don't know whether we'll still go through with it, but it's a cause for concern. But somehow we seem to be able to make the repayments, but it's definitely something that is going to need addressing by the next government.
Going to the Eurobond markets when the U.S. is raising interest rates, that doesn't seem very wise. But what do you make of, let's look at cooking gas now. What do you make of Kenya MPs, lawmakers, seeking to halve the value-added tax on cooking gas from 16% to 8%?
Well, they were not supposed to have it at 16% in the first place. That was, I think, a lot of pressure by, again, the Treasury to try to have as much money as possible. Right now, it feels like a political move driven by the election trying to appease to the markets, which means that there's a high likelihood that in the next finance bill, it's going to go back to 16%. So at the moment, I feel like it's just a move driven by the elections, although the argument on the other side is that they're trying to reduce reliance on fossil fuels and things like firewood, and having people use cooking gas more. So they're trying to use that as an incentive to get more people to go to cooking gas. But already it's already pretty expensive, and I don't know whether the 230 shilling difference is going to make a significant change or bring a new pool of guys who do not use cooking gas to use more cooking gas. So I still think it's just political at this point.
Okay. Well, you preempted my next question. I was going to ask if this is motivated by the elections. But do you think the law will you think it'll be passed? Do you think the MPs will get success with that?
Yeah. I believe it will be passed.
Okay. Let's move to Tanzania, not too far from where you are. Mobile money subscriptions growing by almost 10% from January through March. Are these encouraging figures for Tanzania?
Yeah, they are. It means more access to financial inclusion by the people. So makes it easier to circulate money in the economy, improves the velocity of money in the economy. So it's good for them. So always a good sign when more people are able to access money easily or transfer money easily.
How are they? I think we'll just take a look at the market share breakdown. These telcos are doing well. Vodacom, Airtel, Tigo, yeah, there they are. How are banks dealing with this? I mean, you're in Kenya. M-Pesa, what is it? 8 out of 10 Kenyans have access to financial services due to M-Pesa. How are the banks seeing this?
Well, using the example of Kenya, a number of banks have partnered with Safaricom to offer short-term credit to users through M-Pesa. So your primary platform to access this credit is M-Pesa, but the credit is from a bank. So using the example of M-Shwari, for instance, KCB, one of the other banks, has a KCB M-Pesa where you can get monthly short-term loans, usually monthly. So that's one of the ways that banks are reacting. The other way that banks are reacting is by reducing the cost of transaction. So mobile money transaction is actually pretty expensive if you think about it, especially using the Kenyan example. The amount that M-Pesa charges as transaction costs is quite steep. And so banks are trying to reduce this by reducing the amount of money that they charge you to transact, and now making it easier for people to actually transact directly from your bank. Let's say you're in a supermarket, paying through card. Most card charges are free and the like. So trying to be aggressive in that space to try and limit the impact of M-Pesa or mobile money. And I think this is the major danger that mobile money telcos are facing going forward. They'll have to relook at their costs going forward.
All right, so the banks are able to compete, I guess, on a cost basis. But I mean, so 10% growth there for Tanzania, January through March. What's the projection? I mean, do you see these numbers continue to grow as far as the number of mobile money subscribers are concerned, like, you know, through East Africa?
Yes. I do expect it to keep growing. It's in a growth phase. I think Kenya, of course, was the first one to properly embrace mobile money and have it go to the masses. I think the growth will continue in Tanzania for the next year, and which is good for everyone. With that, then I think just banks will need to be creative on how to kind of get a piece of this market to themselves. Yeah. But I think the biggest thing is merchant operability. The fact that right now you can go to your small kiosk in the village and pay using M-Pesa or using mobile money. This is not necessarily the case with paying using a bank, especially in the rural areas. So that's a big thing that maybe banks would have to look at to be more competitive.
Very interesting space, very fascinating space. It's just, you know, it's wild seeing how those numbers are growing there. Kalya Kiptiony, live from Nairobi, investment analyst. Thank you so much for joining us to talk about the latest from Tanzania and Kenya.